The following content is intended solely for informational purposes. The views expressed by hosts and guests are their own and do not necessarily represent those of Alea Research, its affiliates, or any organizations with which participants are associated. Nothing discussed should be construed as financial, legal, or investment advice. Viewers are encouraged to conduct their own analysis and consult professional advisors before making investment decisions. Welcome to a new Market Cap episode. Market caps, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host, Stefano, Director Institutional Services at Alea Research, and with me I have Ricky Tan, Chief Operating Officer at Nexus Mutual. Nexus Mutual is one of the foundational risk transfer protocols in DeFi. It operates as an on-chain mutual where members underwrite and price smart contract and protocol risk using economic staking rather than centralized insurance structures. After several years of real-world claims experience, Nexus Mutual has become a core layer of crypto's risk infrastructure and is now focused on scaling coverage, improving underwriting efficiency, and supporting institutions as they re-enter the space. Ricky, so great to have you with us. Welcome on the show.
Thanks for having me.
Yeah, definitely. Been looking forward to it. Been wanting to talk to crypto or digital asset insurance companies, projects for a while. You guys are the first one, so I'm very curious. Let's start off with you. Can you tell us a little bit about your background, how it led to your current role at Nexus Mutual, and what your current focus is at the company, and what problems you are most focused on?
Sure. So prior to working in crypto and the blockchain industry, I used to be a commodities commodities trader at JP Morgan in London. And it's actually one of the fun things where a lot of people that, were involved in commodities trading or commodity structuring back in like 2010 to 2015, they were interested in Bitcoin because Bitcoin had this quality where, well, it's a currency, but then it's digital gold. It gets mined, very similar to that. A lot of commodities get mined. And so as I was working on the trading desk, people were always saying, "Oh, we should look into this Bitcoin thing, this digital gold thing." And I vividly remember because I sent an email from my work email to my private email on April Fool's, so April 1st, 2014, with an article that came out that was published on Bloomberg about Bitcoin. And I sent it to my personal email with, "Look into this." Unfortunately, I did not spend time at home looking into it. But when I moved to the US a couple of years later to attend business school, that happened to be at the time when Ethereum launched and a lot of the first kind of like Ethereum projects were incubated on the West Coast of the US where I was living at the time. And I went to a bunch of meetups, caught quote unquote the crypto bug, and ended up doing an internship at a cryptocurrency firm called Abra. At the time, Abra used to be a remittances platform powered by Bitcoin, and now they've they've evolved into a crypto asset management firm. Good to know that they're still around. So that was kind of really my first work experience in crypto. And over time, I have done different things. I had a research and data company called Token Data. And ultimately, through some of the engagement that I did through that company that I founded, I came in touch with the team at Nexus Mutual during the summer of 2020 when DeFi was really taking off for the first time. And I joined Nexus as the first business hire, as the head of business development, really tasked with, well, can you find out what the different areas of demand are, and that's the demand side. And at the same time, on the supply side, work with our capital providers So the people that essentially lock capital in our capital pool work with these investors and large crypto holders to kind of figure out what the risk profile is that they want to get exposed to earn yield on. So yeah, that was really my introduction and first task at Nexus. That's more than 5 years ago. Obviously, over the course of those 5 years, we basically had like two big cycles. We had the first big DeFi cycle in 2020 and 2021, which came to a very abrupt halt with the essentially the implosion of FTX. And then more recent, kind of like since mid 2024, we've obviously had the institutional capital allocators really entering the space after increased regulatory certainty. And kind of during that second phase of my time at Nexus, I stepped into the COO role where I work with the founder and also with our CTO to help set the strategy and then work with everyone within our team to execute on the strategy.
Okay, that makes sense. Yeah, it sounds like from the start you had like a very wide mandate, understanding both the demand side and the supply side. Uh, and that must have prepared you, I think, well for your current role because you were already seeing all the parts of the business, right?
Yeah, correct. Yeah, it's one of the funny things in crypto is that I think for years, the industry as a whole has just been focused on the supply side, namely like how can we increase TVL? How can we increase trading volumes? And not enough attention has been dedicated to like, well, where's the actual demand? In the case of Nexus, the demand is based like the demand for our insurance like products, for the demand for our covers that help protect people against smart contract hacks and other risks.
Hmm.
Where I always think that when I joined, we still had a lot of like, we invest a lot of our time in on the supply side because we wanted to get to a certain level of capital to underwrite the demand. But then once we figured out that it's ultimately the demand side that is the most important thing, I think my job got harder, but also it got way more interesting and fulfilling because a lot of the stuff in crypto has just been supply side focus where it comes at the promise of at one point in time, you are going to get tokens, points, or other inflationary rewards. And that's not a long-term sustainable phenomenon, obviously. In the case of Nexus, it's like we will only succeed in the long run if we can keep receiving demand for our product. So
I fully agree. And I think it's emblematic of companies who have like that forward vision that they're already thinking about this. Um, they're by now there are like plenty of good companies in the industry that are really like revenue focused, business focused, on the demand side, as you call it. I think that's great for the industry. And that must have been an interesting evolution for you guys as well.
yeah,
Let's talk a little bit more about the demand side for that specific product, insurance.
yeah,
How does it work with you guys at a high level? How is it different from traditional insurance?
yeah.
Um, how does it work?
So if let's just start with Nexus Mutual as a whole, and then I'll kind of like segue into our products and the demand for it, how it's different from traditional insurance companies and kind of like the archetype users that drive most of the demand right now. So when we start with Nexus as a whole, it is really as simple as taking a quote unquote traditional centralized insurance company, but then putting every single aspect of it on chain by deploying it into smart contracts, in our case on Ethereum mainnet. So, and at the core of every insurance company or mutual or every risk sharing business model that exists in finance, at the core is the capital pool. In our case, it's about 150 or 175 million. I haven't checked the stats this morning. It's about 150 million worth of Ethereum and stable coins that are locked in a smart contract. And this capital is ultimately used as the collateral to underwrite all of our covers and be there, to basically be used as a payout when there's a valid claim. Now, so there at the core, there's the capital pool. Obviously, what flows in the capital pool are basically two types of cash flows. There are the cash flows, which are essentially the premiums that are generated from people buying our covers. So if you, Stefano, if you, Stefano, want to protect against, let's say, a smart contract hack of Aave, because you might have some money invested on Aave, then you can just go on Nexus, you purchase the cover, and the premium that you pay for that cover essentially flows into your account. So that's the first cash flow into account pool, namely the premiums from the covers. Then the second cash flow that goes into our capital pool are very similar to all insurance-like businesses. Our capital pool gets deployed to generate yield. We take a very conservative approach. We would never allocate 100% of our capital pool into investments, and we would definitely not take on risky investments. So we take a part of our capital pool and invest it in, or essentially we stake it very conservatively in liquid Ethereum staking protocols. So from the staking rewards, we essentially get a second cash flow into our capital. So that's basically the demand and the investment returns that flow into our capital. And then there's obviously the claims that I already alluded to earlier. If there is a claim, i.e. a DeFi protocol gets hacked.
Yeah.
Someone gets hacked. One of our users had a cover that protected them against the hack. Then the claim will be paid out of our capital pool. This again, and I think this is, to me, the finance geek, this is the coolest part, because all of these claims are filed on chain. They are paid out on chain. They are paid much faster than in traditional insurance, etc. It's all very transparent and it's very fast. So yeah, that's Nexus kind of like as a whole, and in general. In terms of how we are, go on.
No, please go on. I already have some questions because there's so much to ask. But please continue.
In terms of how we are different from traditional insurance companies that you and I just use for health insurance or dental insurance, how we are different is that at its core, everything we do is completely on chain. Everything is transparent. Everything's much faster. Everything is open. Like people can just like sign up and become a member of Nexus Mutual, which is very different from a traditional insurance company where if you want to get health insurance, like you have to file in paperwork, you have to file in questionnaires. The decision if you will be accepted to become a member or essentially will receive the insurance policy, that can take days, maybe weeks. You don't know the price up front. Like you have to wait until you get the price, et cetera, et cetera. And we truly believe that blockchains provide like literally superior technology to make all of this much faster and transparent. So that's kind of like our biggest difference from the traditional insurance company, where we are basically essentially like we're open and transparent, where to me like traditional insurance companies are more like this opaque black box, where you just don't know where you are in a certain process and or if you're going to get paid out on a claim.
That's clear. So I have two questions there, right? So
Sure.
like you said, in the centralized model, it's clear who decides who gets paid out and for what amount. With you guys, how is that decided, right? And also, you mentioned in the centralized model, you go through, let's call it this audit, where they decide like how much risk you bring, how much risk you represent, right? How is that, like, is that accounted for with this decentralized model? And I'm sure you guys have thought about like ways that people might try to exploit that. I'm sure you guys also have like counters to that, right? Can you speak to those things?
Yeah. So let's start with actually your second point, which is essentially risk assessment. And for us, it really means risk assessment really means like we have to take a pretty conservative approach to decide on which risks or protocols we are going to list on Nexus Mutual. This is one of the things where ultimately we want this to be more permissionless. But right now, because we still think it's pretty early in the days of crypto, our core team and our some main contributors from our DAO, we take that role on us, and we really have to be at the forefront of everything that's happening in crypto and DeFi. So on a weekly basis, we talk with most of the new protocols that come out, either through our own research as to what's happening in the space, or if some users of ours are asking, oh, I'm looking at this new protocol, it's not listed on Nexus. Can you guys please take a look? And what we do is in this risk assessment, we look at audit reports. We look at the code if it's public on GitHub. We make it a requirement that we talk to every single founding team of a protocol before we list it. The amount of red flags that essentially come up when somebody is not willing to jump on the chat is like, it's too big. Like if somebody just refuses to talk to us, then we will not list it. Of course, it's not foolproof, but in terms of our track record, like it's become this thing where having spoken to probably by now maybe like 1,000 different protocols in this space, most of our team members have really developed this pattern recognition and gut feel of like something is off. And we have this internal rule: if that something feels off, we are just not going to go ahead. Even if we get pressure from users or investors who, are interested to kind of like purchase cover, like if something feels off, we're not going to list it. And having kind of like been through this now for 5 years, it's remarkable that some of these gut feel decisions have actually saved us from a few what would have been very big claim events. I can't disclose which ones, but some of the striking ones. So that's kind of like on the risk assessment side. When it comes down to claims, obviously the argument that we always get from our peers that work in the traditional insurance world that touch on some of the parts that we also touch is basic. Well, with us, at least people can go to court if they disagree with the claim. Like if a traditional insurance company decides to not pay out a claim, in the worst case, people can just go to court. Like that's often used as an argument. For us, that argument doesn't really hold because at least every time that someone files a claim, it's very transparent. If a claim gets denied, we also give the reasons why this gets denied, and all of this gets recorded on chain and can just be seen by anyone. So in the history of Nexus, hundreds, maybe by now thousands of claims have been filed, but most of the filed claims have just been bogus claims or spam claims where people, for example, claim that so they purchased the cover on Coinbase going down, and then the next day they would just say like, Coinbase got hacked. Well, we all know Coinbase didn't get hacked. So it's stuff like that, or people purchasing the cover after a hack had happened. They lost money in a hack. The day after they purchased the cover and then they filed a claim. And because everything is recorded on chain, we can just instantly see, well, you're not going to be paid out on this.
Right.
And on the flip side of this is actually the beautiful part of everything being on chain, namely is that because all data is on chain, your history, if you deploy in DeFi, is on chain. It's very easy for us to calculate what the actual loss was. Because we can track and calculate everything either, with any of the on-chain monitoring tools or just some spreadsheet work. It's very different from like traditional insurance where if you file for damages for example, for a rental car that you might have wrecked, it can take months, before you will know, well, this is the estimated damage. And then you're like, oh, but I dispute this. And then it'll go to like a second claim adjuster, et cetera, et cetera. And by the time that you get the claim, actually paid, you might just be like 18 months later. And like that's the beauty of on-chain and DeFi is that it's very easy to kind of like decide what the actual loss was.
That's clear. Yes. Okay. So those are the upsides. You already touched a little bit on the different types of users that you have, right? The people who take
Yeah.
insurance, or the parties, I should say, that take insurance. So I'm hearing obviously DeFi protocols. I'm also hearing individual participants. Am I correct to assume that there are also funds in there who want to, and how does that work? Would they insure like their whole portfolio as a whole, or individual positions within or on certain platforms? Um, I guess now we get a little bit in the territory of the different solutions and
Yeah.
products that you offer, right?
Yeah. So you're completely correct to kind of like assume that there's been a change in essentially our user base.
Mm.
So when Nexus launched in 2019, and also when I first joined, it was mainly, individuals, enthusiasts, or in some cases even DeFi degens that were, generating rewards and yield on their on-chain strategies, and they would basically go to Nexus and purchase the cover for all these new projects that we're launching. Over time, and especially since mid 2024, most of this flow has been completely replaced by institutional funds. Reason being, with regulatory certainty, every month we get to know at least a handful of new funds, whether they are spin-offs of existing traditional finance hedge funds or completely new crypto specific funds that are looking to essentially generate yield on stable coins or even on some Ethereum or Bitcoin that they hold on chain. And that has completely changed our business development and sales approach, because these institutional investors, most of them start from scratch. Like they understand Ethereum, they understand DeFi, but they don't really have a good sense or network with all of these protocols. So we usually engage them very early on when they haven't even closed the fund yet, but they just want to have a chat to get our understanding of what the risky protocols are, or also for us to kind of opine on some of their strategies. So they really we come on board really when they are still months away from deploying. And when they get to deploying into DeFi, it's really a stepwise approach. They will start maybe with one or two protocols, and they tend to be the safer ones, like Aave, Morpho. That's where they'll start, and then they'll do a few million. And then when they're comfortable with that, and when their risk department is comfortable with that, they'll add a few protocols to the stack, et cetera, and some of our larger users, they deploy into 50 plus protocols across DeFi. So as the complexity increases, the need for cover also changes. For example, when they just want to buy cover for Aave or Morpho, we typically just guide them through the process of all right, you go to Nexus Mutual, you type in Aave, here you can buy the cover. If they've deployed into 50 different protocols, that doesn't work anymore because it's just an operational nightmare. So what we do for these type of clients is we put together really bespoke, we call them portfolio covers, where we agree with a fund on essentially on their risk framework and on the list of protocols that they can deploy into. And we build in some flexibility so that they don't have to go in and out of the Nexus app every day to change their cover.
Okay, that makes sense. I'm thinking that you have a very interesting position in the market, because you have insight into two very specific and quite um, like two pieces that are hard to have insight into, or at least you have a unique position. Uh, the ones I'm thinking of is on one hand, like you said, a lot of these funds come to you first, even when
Yeah.
they're starting out, almost like an advisor, right? Because you have
Yeah.
unique insight
100%.
into where the risks are in the market. And you might have a very different perspective on that than, say, security firms who might also have a perspective on that, but based on very different data, right? And then
Yeah.
on the other hand, you're talking with these funds to cover their portfolio. You talk with
Yeah.
them on their risk framework. So you already have like a wide insight into how different funds might go about those different
Yeah.
things or the overlap in that.
Yeah.
Can you maybe touch a little bit more on that? It's understood that obviously you can't, like a lot of this is confidential, but how does that, I guess, inform your work and what does that allow you to contribute to the space that others don't?
It's one of these things where I would even say that most of the parties that we talk to, or that we help onboard into the space, they probably don't end up purchasing cover on Nexus. And that is, I mean, I think that's completely fine because as long as I was able to like contribute to the risk understanding, I'm a strong believer in like it'll come around, if not now, maybe in a couple years time. So
Right.
like and the mindset behind this is the whole idea of running an insurance company on chain is that you need to be around for more than one cycle.
Mm,
And kind of like our approach to this essentially institutional business development um, approach is we are we want to build long-term relationships with these capital allocators. In terms of like how that informs us, what we do see, and that's the nice part of like, yeah, I like to think that I contribute to the funds, together with our head of BD, Ralph. But like they have also been very helpful for us to understand like where the space is going. I think that if I had not been in touch with funds over the past 2 years, I would have not realized the magnitude of importance that stablecoins have. Um, I'm sure you can still remember the days that most of us were just denominating all of our trades and investments either in Bitcoin or Ethereum, and that is just like that's gone. Like the stable coin meta has completely changed it, where ironically everyone's just like denominating everything in USDT or USDC. And if I had not spoken to all these new funds, I probably would not have appreciated that this much. I also think that one of the things that, really came to light for me is that, and this happened because a handful of the funds that we onboarded at the start of the institutional wave, they all brought to our attention that they started to use threat mitigation and monitoring tools. And what I mean by that is they were starting to use tools that would 24/7 monitor a certain set of smart contracts to let them know that if there was a hack, an alarm would go off and whoever's responsible for fund operations would then pull the funds. The
mm,
best example of this being a company that we work with and partner with as well. It's called Hypernative. And they have just built this incredible suite of monitoring tools and services that essentially allows people to get informed when a hack or exploit is happening. And this is something that, for us as a Nexus, that gives us a lot of comfort if a user of ours, especially a fund, uses these monitoring tools, because it decreases the chances of claims for us. So that's also something that I learned from all of these funds, where they're saying, well, we're actually starting to use some of these third party services, which 5 years ago, when some of these services were started, were still like very niche. But I think now they're kind of like a very important part of the security stack, beyond stuff like auditing and security firms. So
That's fascinating, and that's pretty smart, obviously. And I could totally see how that makes you guys more comfortable and help you sleep at night, right? I'm curious also about like the risks that you guys, because you guys will have like a very close like finger on the pulse when it comes to like what are risks that you guys are seeing in the space. Like obviously you cannot predict things, but I'm
Yeah.
sure you have ideas about risks in the space that are not obvious to most people or that are not globally recognized
Yeah.
that you guys are actually seeing like early signs on or that you like to warn people about.
Yeah. I'm, personally, I'm kind of a believer that we've kind of like, we've, in the past 10 years of, crypto and essentially Ethereum and DeFi, I think we've seen most individual expressions of risk. There's smart
Mm,
contract hacks, there's phishing, there's there are bridge rug pulls, there's key theft, there's Oracle failure, etc. The biggest threat that I see right now is that DeFi is, as it's kind of like maturing, it also becomes way more interconnected, especially with the emergence of vaults. Vaults on top of platforms such as Morpho or Euler, or Veda. Like, I think vaults are a great primitive, but vaults often mean that the funds that are deployed into a vault get deployed into all these other protocols underneath. Um, And that's the beauty of crypto and DeFi. It's composable. Everything just connects permissionless. But there is no such thing as like this vault or this DeFi lending protocol only has one type of risk. No, because it's connected to all these other protocols, this risk essentially compounds. So instead
um,
of one layer of smart contract risk that we used to deal with kind of like 5 years ago, often when the request comes to us, the user or fund comes to us, can you guys cover this specific vault? Like we literally start chipping away at the vault, and it's like, oh, that's 1, 2, 3, 4, 5 protocols that this one vault is just exposed to. So it's just the composable nature of DeFi adds enormous amounts of complexity. And that, I think that's one of the things that we saw a few weeks ago when there was this protocol Stream Finance that essentially went insolvent. And the first thing that people are like, we actually don't know who's all exposed because everything was just kind of interconnected. And now only a few weeks later are we starting to figure out, all right, this vault was impacted. This player essentially, this protocol essentially suffered losses, et cetera, just because of the interconnectedness of the system. And so that's one of the main things that I see happening, and I think that a lot of people are not aware of. And the second one being like, this is again with complexity, but we often think that, when it comes down to pricing and data quality, people are like, oh, just use an Oracle. But there's no one Oracle that fits all. Um, every every use case in DeFi might have slightly different requirements of what an Oracle needs to do.
yeah.
And I think that's also something that, people forget.
Interesting. I got you. Yes, the systemic nature of the industry right now, right? It also is connected to something you mentioned earlier, namely market maturation. And that's something I wanted to ask you about as well, specifically in connection with the primitive, I guess you could call it, of insurance now being on chain.
Hmm.
Last week I had Tian Lee from Pendle on the show, and we spoke
Yeah.
about how the introduction of Pendle and now Boros is helping along the market mature because it allowed you to do things that weren't possible before. I could definitely picture something similar being like going on with you guys with insurance on chain, right? Like it's one, it's clearly a sign, I think, of the market maturing. That this is well, not to say it's popped up because you guys been around for a long time, but let's say like the initial introduction and the growth
Yeah.
of it that we probably going to see more of. But question to you, I guess, is how does that primitive of insurance being available in the first place, how does that impact a market like decentralized finance?
I like to think that insurance is kind of like an essential for crypto to really scale into the trillions. If you look at market sizing, um, I think when it comes down to specifically the demand for insurance, we are definitely entering a new phase. Like the first 5 years of DeFi, there was simply not a lot of demand for insurance because most people participating in DeFi were extremely risk seeking.
Yep.
And now with institutional capital, where a lot of these funds and allocators, they have fiduciary duties to their limited partners.
Exactly.
Um, well, like we've also spoken to some of these limited partners, which are traditional pension funds, endowments, or you know multi-century family offices.
Mhm.
Like insurance or risk management is top of mind.
Yeah.
So, and it's I like that you mentioned Pendle, because I think the team at Pendle is very much aligned. Like, in order for us to get that next step up, like, we need to offer the same capabilities. Where does that leave Nexus and some of the new entrants in the space? I like to think that it's going to scale very easily, but I already know that it's going to be hard. Um, but that's part of the fun and that's part of the job. So
Exactly, as it should be. I was gonna say, so that you already, you get into territory right now where I wanted to go as well, which is basically, okay, what's next? What's on the horizon? How you mentioned it will be fun, it will be tough. How will you stay competitive? What are innovations coming up? Let's take it first on the
yeah,
near term horizon. From now until the new year, little bit left. But maybe that's very short. But let's say what's the first thing coming up for you guys?
yeah. So on the product side, we've listened a lot to the new kind of like institutional entrance in the space, and what we're just seeing way more demand now than a year ago is what I mentioned earlier is our portfolio cover product, where funds just want to be able to deploy into more than a handful of protocols with some flexibility. So we're pricing up a lot of and putting together a lot of bespoke, flexible solutions for these funds. Another thing is, with the vaults, we are working with both vault platforms and some of the vault curators to see how we can really embed, cover or insurance at the vault level. Um,
Interesting.
from a new primitive side is, well, we work with companies that essentially build products on top of Nexus. Because you can think of Nexus essentially as an insurance layer. There's a very cool company that we work with called OpenCover, and we're working with OpenCover to really integrate our Nexus cover products all across DeFi. So imagine you just go to a protocol, you deposit money, and at the point of sale or at the checkout, you essentially
Yeah.
cover those funds with Nexus. Take it one level higher, and it's kind of like we want to be able to essentially provide cover on every single vault that is out there in the space. So this was a really cool project that we work with the team at OpenCover. From like the less quote unquote sexy side, we just revamped our claim system. Our claim system used to be fully permissionless. Anyone that was a member of Nexus Mutual could essentially vote on the outcome of a claim, but through trial and error, we've literally figured out that what people actually want is that a group of experts votes on a claim.
Yeah.
And if a claim gets rejected, then they just want essentially an escalation method. So we change our claim system, where it's now a group of risk experts in the space. Some of them of our team, but we're onboarding new risk experts or new claim assessment experts. We just did our first batch of actual claim payouts using this new system, and it was much smoother than in the past. So that was also because that was really from user feedback where people were saying, you know, we don't need everybody to be able to vote on things. We're just fine to delegate it to a group of experts as long as we have an escalation system, which we put into place. And then on the capital and supply side, insurance only works with capital efficiency and leverage. So what we've just announced and what we're building out right now is we are building a bridge or slash a connector to Symbiotic. Symbiotic is, one of the largest restaking protocols in DeFi, which allows depositors on the Symbiotic restaking platform to essentially allocate capital to Nexus Mutual. So it just allows us to underwrite even larger covers for a lot of our institutional users.
That's interesting, and that's very smart. I see you're working on basically distribution through integrations on multiple fronts.
Yeah,
That's yeah, that's definitely talking about leverage, right? That's another way to get leverage. That's very smart. Hmm. Okay, so you guys have a lot going on. That's clear. Um, what's what do you hope or expect from 2026?
I just really hope, and you mentioned the word distribution just now. I just hope that we will find more distribution methods. I take a lot of pride in kind of like the hard work that we as a core team and our DAO contributors have done to really like onboard new users, list new risks and protocols on the space. But the ultimate dream for Nexus is always just to be this insurance layer that others can tap into. And that's essential, whether you're talking about the demand side with the covered buyers or the supply side, namely with capital providers. Distribution and tapping into the right distribution platforms that's ultimately what enables at scale insurance in this case. Um, we're putting a lot of eggs in the distribution basket. So I kind of hope that some of these essentially investments and work streams are going to be successful in 2026.
Definitely, I don't doubt it. I think when you talk about ideas whose time has come, right? I think you guys are perfectly positioned for basically the next stage of the industry, which we already talked about, right? Like individual actors are very have a very high risk appetite. They're not really interested in insurance. That's not why they're involved in DeFi and crypto. But with all the players coming in now, that's very different and something
Yeah,
you guys, I mean, perfect time, perfect place.
let's hope so.
Let's hope. Let's do it. Amazing talking to you. It was very insightful to well, first to understand how you guys do it and how it differs from the centralized alternatives that have been around for centuries, but also definitely like the unique insights you have on risk and how funds like to structure and approach the market, and ultimately the how it impacts the market as well, right? How it helps it mature, and everything else you guys got coming up. It's been a wonderful, insightful conversation. So thank you for that.
Thank you. Yeah, and if any of the listeners or audience wants to reach out to us,
Yeah.
just go to our website nexusmutual.io. There's a contact form, or find us on Twitter. We're always available. More than happy to talk to people if they're interested in just getting to know more about Nexus and what we do, or if they're actually looking to cover their crypto.
Perfect. And where can they find you personally best? Is that on LinkedIn, on X?
Yeah, LinkedIn, Ricky Tan, or on X. I still call it Twitter, or on X at token date. on X at token data, that's my personal account, or just at Nexus Mutual. So
Very nice. Awesome. That's wonderful. Rick, thanks again for coming on and having this conversation.
thanks, Stefano.
Absolutely. I also want to thank everyone for tuning in. Always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And of course, tune in next time. We release a new episode every week. So follow us on X or Twitter, as Ricky likes to call it still, and YouTube. This was Market Cap, where funds and firms provide their insights on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.